So the US Federal Reserve cut interest rates by 25 basis points, bringing the range to about 3.75% to 4%. Yet the stock market and the bond market was a little choppy around that announcement, but really started to sell off later in the press conference when Powell started to talk about December's rate cut. Now, the rate cut that we got this month was fully expected, and there was no surprise there. We were going to get 25 basis points, and we got the 25 basis points. But what was interesting is that there was one member from the Kansas City Fed, Jeffrey Schmidt, basically opposing the idea of a rate cut and saying, let's keep rates steady. Powell did mention that there's opposing views. Kansas City Fed wanted the rates to be held, and Moran, which is Donald Trump's favorite person that could be the next Fed chair for the next year, wanted a 50 basis point rate cut. No surprise there. But you got the 25 basis point as expected, and Powell mentioned that there are opposing views, and did mention that yes, the labor market is softening, but is unsure of what to do because of the government shutdown, because of the data. Now, why did they do the rate cut this month? And Powell's answer was that it was more risk management, wanted to manage the risk. And therefore, we're cutting the rates. But he did mention and threw cold water on any idea of a definite rate cut in December, which caused the stock market and the bond market to sell off. Well, next day, we get with some earnings data, we did get some choppiness and some move up higher in the big tech firms, causing the Nasdaq and the S&P to move up higher. But those moves tend to be, as I'm looking at it right now, short-lived, and we're seeing more sellers coming in and pushing the market the other way. Other way meaning down. And because of the idea of that December rate cut, not 100% in, and saying that they're likely to move slower now, with the idea that a potential that they could hold on rates, not ruling out that possibility. And they said that the reason for slowing down is because they need the data. They need to have more certainty, especially although inflation is coming down, but they're still not sure if they're not getting, with the government shutdown and everything, they're not getting the government data, whether they should move in terms of cutting rates or not. Basically saying that when you're driving a car and it's foggy, you don't move faster, you move slower, because you don't know, you're not clear on the direction. And that's definitely for sure. Powell is not clear on the direction and what he wants to do. Now, there are other data points that they look at, right? They did mention about ADP, and we did see weakness in ADP numbers. There are companies out there laying off, Amazon and so forth, right? Whether it's AI related or not, whether it's a contraction in the economy or not, there are layoffs happening, and it may make you think that shouldn't they cut the rates for at least December, at least signal that, but they didn't. They didn't give the 100% commitment towards the December rate cut, thus causing the stocks and the bond markets to basically move down lower. Now, whether we will get the government coming back, whether the shutdown continues, it will be muddy waters until we get data, until we know what the Fed wants to do. But definitely, they're not looking towards cutting very fast, committing to anything, and did throw cold water, which basically the markets didn't 100% like it. And also quite confused as well. Because not only they cut rates this meeting and didn't fully commit to one in December, that doesn't mean that they're going to hike. That means that rate cuts could come just maybe not December, maybe next year, and maybe there might be more next year. And especially with the changes in the head of the Federal Reserve, if a new member comes in, that could change very quickly. Now, on a positive note, Powell did say that they're ending QT December 1st. Therefore, the tightening of the balance sheet, the tightening that they were doing this whole time is coming to an end. And they're going to pause for some time after that. What comes after a pause is QE, quantitative easing, which is printing money, buying back bonds, stimulating the economy. Now, they mentioned that they will be buying more T-bills. The bond market didn't like that, causing those yields to go up and the bond prices to come down, which in turn is related to your mortgage rates if you're living in the US. So those rates went up, which would have upward pressure on those mortgage rates as well. So the bond market didn't fully like that because you're focused more on maturities. Basically, they want to buy bonds that are less than 52 weeks. Now, it's a little bit confusing here because they did post something that whatever bonds they had of the other durations, like the 2-year or whether it's 10-year or longer term or whatever, they could roll that over back to those same maturities. So it's not very clear in my humble opinion. Maybe someone can clarify that in the comment section. But nonetheless, QT is ending. Eventually, there will start QE. We don't know when that will happen. I suspect maybe May of next year, maybe later, maybe when there's a new Fed chair, or unless there's something disastrous like the labor market is plunging and the job market just got worse, or there's a massive crash or recession, then 100% they're going to go on full-on printing. But until then, it's just a pause, and then eventually they will be stimulating and pumping money. I think personally, if nothing breaks or nothing's happening, they will pump money, stimulate the economy, and do it gradually. Unless, again, depends who the Fed chair is. That could 100% change in a year time from now. So definitely, we don't know fully yet because we don't know who will be the next chair. But that's definitely a good sign, is that the QT is ending, the tightening is ending. Now, historically, we tend to see that before the money printing happens, we do get more rate cuts. So it's not, it was a hawkish cut, which is why the markets didn't like it. But it's not entirely bad, because if you're ending QT and you're going to eventually get QE, before they're doing QE, they're going to do maybe a couple more rate cuts, which could happen next year. Maybe, if all else, if in a perfect scenario there, right? Now, if things move up hot, inflation gets hot, whatever the case may be, that could change things. If there's a new Fed chairman, that Fed chairman is hawkish, not dovish, that could change things. There's too many variables that we don't know. But all we can say is definitely the end of the QT is a good signal and is a good sign. And we'll just have to wait and see another month or two, see if we get new information, see if the shutdown is done with, see if there's any change in the language from the Fed members as well, in also data, in also the ADP numbers, in other data points as well that we could look at. That might be more real time, and in fact might be something that we all have access or can get access to as well. So anyways, those are my thoughts. That's how the markets played out for the Fed meeting. We'll continue to watch. Yes, that was hawkish. That was a hawkish cut. Yes, we did move up aggressively in the equity markets. Yes, we could see a pullback, but that doesn't mean that's the end of the bull run just because you get a pullback, right? It's healthy to get pullbacks in the markets. And with Powell still providing that optimism of future rate cuts, maybe not December, but after that possibility, he didn't commit to it, so let me clarify that. But if you just think about it, if they're ending QT, that is stimulating. and when they pause, after a pause, they do go into QE, and before that happens, you tend to get rate cuts or more rate cuts, or you could get them simultaneously. But we have had rate cuts already. Could they pause and just run QE? Anything's possible. They could pause on rates and do that. But I suspect, my humble opinion is that we might see some rate cuts next year. Just a question of when. Just a question of what does the market look like? What does the labor market look like? What does the economy look like? Etc., etc. Shutdown of the government. New Fed member. Lots of variables. So yes, hawkish, negative, little bit short term, but could be bullish for the longer term in the US. So those are my thoughts. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video. And I'll see you guys around. Cheers. Bye.